Global equity markets succumbed to a one-way sell-off over the last 2 days after Fitch Ratings downgraded United States sovereign rating from AAA to AA+. The Wall Street too felt the heat from the BSE Sensex and NSE Nifty dropping over 1% each in the last 2 days. This comes after a knee-jerk reaction on Wednesday that saw most global markets lead. However, brokerage Morgan Stanley's rating upgrade on India to overweight helped stem the fall in the Indian bourses on Thursday. That said, analysts are not worried about the fresh bout of selling, which they believe is a knee-jerk reaction, according to VK Vijay Kumar of Geojit Financial Services. The credit downgrade does not alter the macro and fundamental factors driving the global rally as the United States economy's soft landing narrative remains intact. With strong GDP and easing inflation in the United States, the sentimental impact of this downgrade will likely fade away soon. Meanwhile, the last time the United States saw a downgrade from a major rating agency was over a decade ago in 2011, when S&P cut its credit rating to AA+ from AAA. Back then, it took United States and Indian equities over a month to get back to their feet. In the 1 month after the downgrade, the S&P 500, Dow Jones, and Nasdaq indices lost over 2% each. Back home, the Sensex and the Nifty 50 dropped up to 3.7% during this period, while the Nifty Bank Index took the sharpest knock of 7.2%. That said, analysts say the move by Fitch Ratings is more symbolic in nature, as the reasons for the downgrade are already well known.
So I'm saying these are downgrades basically, but it is more symbolic in nature than anything else. So why the world is reacting is basically, I think world has done pretty well basically in the last 2-3 months. And they want a reason for basically to take away profits. So as you know, basically every new high, people are not comfortable saying what's really happening. Is it sustainable, not sustainable? So I think that's where all this issue is there. Maybe another 200, 300 points down from here and things will settle down. Some or the other keeps on coming out. So inflation, if it continues to go down in the US, that will trigger basically things that that there will be no more rate hikes. And that will indicate basically that it might be a soft landing in the US. Because we look at it, most of the things in the US, most of the growth parameters still continue to be strong in the US. So if those things basically, any of these numbers come out, I think things will start going back to normal.
Thus, analysts are convinced that Fitch's US credit downgrade is not something that investors should fret about. And the markets, they believe, will eventually turn around going ahead. Today, on August 4, the Wall Street action will be dictated by global sentiment and Q1 earnings of Britannia, M&M, IDFC, and Delivery, among others.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.